Good morning. It's Monday, December 22nd. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I'll be joining Yahoo Finance at 2:45 p.m. Central Time to share my outlook on the precious metals and the commodities into 2026. So looking at the precious metals, a sea of green across the screen here with many of them hitting all-time highs. So you're seeing gold and silver, they soaring to those all-time highs due to escalating geopolitical tensions and bets that there will be further U.S. interest rate cuts. So the latest push comes higher as traders are betting that the Federal Reserve will cut rates at least twice in 2026, and U.S. President Donald Trump here advocates for looser monetary policy. So the rising geopolitical tensions, including a U.S. oil blockade against Venezuela and Ukraine's attack on a Russian oil tanker, are boosting crude oil prices up about 2% here. So it's up about $1.13 at 57.65. That's the February contract on crude oil. Now looking at gold, those backed ETFs, they're seeing inflows rising over 4 straight weeks. Other precious metals, they are surging, with palladium up more than 4%. Platinum rising for an 8 straight session, trading above $2,000 an ounce for the first time since 2008. So some sectors in focus here. The shares of gold and silver miners, they are advancing in the pre-market as both those metals climb to record highs. Gold miner Newmont gaining about 2.6% and core mining up 3.6%. If you have an account at Blue Line Capital and you are active in the mining alpha portfolio, those are 2 of the positions and 2 of the core holdings that we have on. Now looking at the gold market rising to an all-time high, 44.53, breaking out over that previous all-time high and holding trend support. So we're going to want to look at those support levels as major support comes in at 41.90, and then below that trend support 39.70. So only a sustained decline below that level here really breaks this bullish trend and momentum. Gold has been underpinned by central bank purchases and then those inflows that are going into those exchange-backed funds. Now looking at the macro markets here, the U.S. Coast Guard's pursuit of a third oil tanker off the coast of Venezuela really intensified the blockade that Trump administration hopes will cut off the vital economic lifeline and isolate the government of President Nicolas Maduro. Looking at the broader pictures here, we're seeing a sea of green across the screen in the equity markets as well. With the S&P 500, you want to be trading the March basis as December had expired. March up at 69.11. You got the NASDAQ up 134 points at 25,708. The Dow's up 15. The Russell's up 11. And you got the FANGs advancing 88 points here. So the year-end rally in stocks really is taking hold here as investors remain positive about further gains into 2026. Although the volume, they are set to be about thinner this holiday shortened trading week. So the S&P 500 up about 0.4%, and it climbed about 0.9% on Friday. That's the most in a month here. And then the NASDAQ up about 0.6%, building on that jump that we saw on Friday. Now you look at the interest rate expectations, markets are anticipating about a 20% likelihood that the Fed will cut rates 25 basis points at that January 28th meeting. Looking at the risk in the FX rundown, you got the dollar index here slightly lower. It's the only one that's red on the screen, sitting at 98.14. The euro up at 117.80. 10-year treasury yields up at 4.16%. The VIX sitting at 1720 and Bitcoin back at 90,000. You look at S&P gamma exposure, it remains neutral gamma here, implying that option position isn't heavily skewed in either direction. You go across the pond here, Europe and Asia. European stocks, they were muted here, but the miners are outperforming. You go to Asian stocks, they're extending their gains as tech firms, they're really tracking the U.S. peers higher. You got the MSCI Asia Pacific Index climbing up 1.1%. And then the tech-heavy benchmarks in Taiwan and South Korea, they're leading those gains in the region, climbing about 1.5%. So you look at the ETF flows in the metals here. They're buying gold, silver, platinum, and palladium. So gold tacking on 0.1% with year-to-date rising 18%. So the exchange-traded funds, they added 87,000 troy ounces of gold. That's on the Friday session here. And total gold, again, up 18% to 98.4 million ounces. You also have silver tacking on about 0.1% with those year-to-date ETF flows up 19%. So they had about 1 million ounces of silver on Friday. And then we saw platinum holdings increase for a 5th straight day. Palladium holdings increase for a 13th straight day. And then it was increases across the board on the week, having the gold-silver ratio here dropping down again to 64-1. So we'll see how this all plays out here. Usually, historically and seasonally, this is kind of when we get the afterburners into the, at least the first week of the year. So we'll see how that all plays out. A lot of seasonals started here in the precious metals and copper, silver, gold, the S&P 500, the Russell, all starting on Friday and Thursday of last week, and they tend to carry out all the way into January and February. So you guys got any questions? You want to learn more about those particular seasonals? I could send you the breakdown on that type of thing. Seasonals are just something, they're just one tool in the toolbox, not entirely actionable, but it is just something to observe and to take in here. So it's very interesting to look at how these repetitive things happen in nature, but remember that past performance, not indicative of future results. So you guys got any questions? You want to open up? This is a perfect week here. A lot of people are going to have a lot of extra time on their hands. Get the futures account set up here with us. It takes about 5-10 minutes. We send out an application. You fill it out here. We get the account approved, funded, and then you can start getting involved in these precious metals. We've got different size contracts across the board as well. And there's about 32 major commodities out there. So a lot of different things to play, including that oil market where there's 100-barrel contract as well. That's an easy point of entry for many people to get involved with. So remember, futures and option trading, it does involve risk of loss. May not be suitable to all investors. Good luck, good trading.